Good morning, everyone. Happy Thursday. How is everyone doing? I'm your host, Mark Stoker D. Let's see what we've got going on today. But before we get into it, if you stumble across this stream randomly, I've been trading for 18 years. I've been a prop trader for various prop firms since 2013. Trading slightly more unusual products, such as energies markets, natural gas, crude oil, gasoline futures, heating oil, just all the weird stuff that you never really hear about. But for this particular session, I'm going to focus more on the precious metals because I have been trading them for quite a few years as well. Now, as I explained previously, I don't like trading before the London Metal Exchange is open, which is not for another couple of hours. So we're going to try and do some analysis first. Right now I'm looking across the board and a lot of the products are just glued to VWAP. Not too much action. Equities have moved up overnight as a result of the Nvidia earnings, so that will be interesting later on. But so far, yeah, I'm not really seeing too much happening. A couple of products that are on my radar are probably copper and natural gas, maybe for a little bit later on. Crude oil. Crude oil looks kind of interesting, but again, it's the wrong time of day for crude oil. I never really traded crude oil for this time of day. To me, it's almost exclusively a NYMEX product, but you know, we can have a look at crude oil. So what is happening today? I'm just going to check what sort of environment we're in. Just 1 minute as I locate the options side of things. Okay, so crude oil is interestingly, in a slightly higher negative gamma environment. And it does look, Now, if Coach Hoop was here, he would be like going, D, don't do it. Don't do it. Because we call it the toxic ex-college girlfriend. We both used to trade it a lot. But here's what's happening. So let's plot some levels on the chart. So we have a gamma wall that is so far reactive. Up at 64 for this current contract. That's core resistance and gamma wall. And one thing that's interesting to me is that we have GEX1 coming up at 63.50. Now, in a negative gamma environment, this particular level tends to be more of an accelerator than anything else. In a positive gamma, it can stabilize the prices just like GEX2 and 3. And one slight issue is that when I look at NYMEX, we are opening above, we're opening inside value. But for the London session specifically, where we were yesterday, pre-market they kicked it off into a trend. So that's very, very intriguing. Even though crude oil is also stuck at VWAP, this rejection from this gamma wall is interesting to me. Specifically because we went over, it had that typical Frankie fake out, so we went over the overnight low, which for me, since we're talking Asia, was up at 63.90. So a wick through that, quick reversal. Now the issue with August, we're still in August, is that it is a low volatility environment. So whatever I try to do with this, do we have enough volume to actually take this lower? Because I would like to short crude oil. And I also don't want to be on the full contract either, so it's going to be just a little punt if we do this on a micro. And let's I mean, it went up. Yeah, I'm just looking at the numbers, right? So it went up yesterday. It did go up, but it was still like 88 ticks. That's pathetic. So if I do anything, it's gonna be like 30 ticks profit. Oh no! Do I do it? Should I do it? It's funny how it just draws you in. It's like, trade me. Look at how great it looks. Trade me. And then you trade it and you're like, ah! Why did I do it? Pete, the process parrot, goes, no! Don't do it. Can I check M&Q for long? Look, I'm not really an NQ trader, right? I'm not an NQ trader. And out of all of the equities, I would prefer ES, DAX, and YM. Like, I very rarely look at NASDAQ. If you were watching Linda Raschke interview a while back, which was on TopstepTV, Hogue did the interview, because I don't know how many of you know, Linda Raschke knows the Topstep guys. Her daughter used to, I think, work for Topstep. Then Mick from the risk team, he was working for the hedge fund that Linda was running. He was her assistant. And, you know, we have, like, connections. And notice that in that interview, she never said, hey, if you want to be successful, trade NQ. She didn't even mention the damn thing. She mentioned corn, though, which is arguably one of the slowest products that in existence, but still a very good product if you can get it in the right time of the year, seasonally, especially if you have either, you know, harvesting and then there's like seasonal patterns that you can rely on. But she did not mention NASDAQ. So why do you think that is? I really want you to think about what we're doing here. I'm really vocal saying that NASDAQ is not suitable for, like, I'm going to say it, 99% of traders who are attempting to trade it. It messes with people's emotions. Newbies look at it as some kind of, and not newbies as in like age-wise, but newbies trading-wise. They look at it as some kind of a, get rich quick sort of thing. And then every time I say, well, trade something slower, they throw it back in my face how they don't have the patience. Patience is like the first line of the job description here, right? And then they're like, oh yeah, but you know, I'm so addicted to it. So I don't like NQ. I've been very, very straightforward about this. You have probably I could probably name 50 YouTube NQ traders who can give you the levels and are also looking at profile and options and a whole bunch of stuff. 50 of them I could name, right? So let's stick away from NQ. I'm not going to look at it. I don't want to know about it. And this is not the stream. If you want to learn about NQ, this is not the stream for you. I'm sorry. You know, we have so many beautiful other products that are like nobody's talking about them. So this is what this stream is about. It's to expose you to something else rather than NASDAQ. Okay? We clear? Are we clear? Ranting immediately on a Thursday morning. Oh my goodness. Oh, Sarah, I just saw your poor doggo. Oh no, what happened? Sarah, if you're around, tell me what happened. My goodness. What did she get bitten by? Yikes. One of my dogs swallowed something last night, so we had to make sure that he's okay. But yeah, that's terrible. Oh, good. Okay, well, good to hear that. What happened? Because, you know, we also live in Surrey, and we've been seeing some big hornets. Like, have you seen them? We had like 2 in the space of a week flying into the house. So what happened to your poor Nala? Dogs, eh? They get their faces where they're not supposed to. Always. Mine have gotten into so much trouble. One spring, my Bernard decided to swallow a foxtail. That was a fun experience. So yeah. All right. Let's see if Bookmap can provide me some more insight. Yeah. Sarah says must have been a wasp. Yeah, it could have been a hornet as well, because I saved mine from chasing the hornet all around the house. One of my dogs went up to it when the thingy was on our big bifolds and tried to like poke it, and I'm like, what are you doing? Get away from it. It's like, it's a massive thing. So yeah, it could have been a hornet. It looks a little bit more severe than a wasp. Yeah, so I don't see anything on Bookmap. We are in a slightly positive delta on crude oil. $115 for those who want to know. I mean, it does look good. Maybe just like make like $30 for the day or something. Get a McDonald's Happy Meal for 2. You know what? Let's do it. Let's try it. Just a tiny little thing. Now, stop loss has to be a bit wider. It does. Why? Because the structure is telling us that. So let's see if this positive delta gets shaved off at some point. It's attempting to dip down below VWAP, but, you know, we do need this volume to grow slightly to the downside. I am in micro, yeah. Okay, let's see. Let's see what they want to do with it. Let's make some peanuts. And then maybe as we go into the rest of the day, we can make some Brazil nuts. Because it's August, you know, I hate digging holes on days when I don't think there's that much going on. But, you know, with crude oil being a short bias product, like equities are upward biased, right? Crude oil, short biased. So let's see if we can maybe get down to at least the value area. The value area high from the London session is sitting at 63.26. This is not NYMEX value. We're inside NYMEX value for now. So, and the value low is 62.99. Let's say 63. So London will. So yeah, what am I expecting here? Since we rejected gamma wall, and we are in a negative gamma environment, which means everything can be amplified, this GEX1, I'm expecting it to act as an accelerator through this overnight low that we have. We already had the Asia high smashed and reversed, so that's done as far as the setups go. And now I want to see whether we can run through GEX1 and then get to effectively GEX4, which is also the value high. Funny how that works, right? That these GEX levels are always at like some kind of a important inflection point. So yeah. So far so good. We have 5 ticks. 5 ticks. And because we're trading peanuts, I will be talking ticks rather than any kind of dollar amounts, because the process is what matters here, especially when you're trying to save money. It's still the same trade, right? It's the same trade. If I was trading a full contract, this would be 50, 60 bucks, but I'm giving myself a super tight leash until this summer dryness goes away. So yeah, the hypothesis is a test of the London value high at the very least. We do have some stronger levels down towards 63 area. So we'll see how that works out. It's approaching GEX1 right now. Okay, delta has been shaved down to 30. So it went from 115 down to 30. It was like a sharp move down. It was actually a pretty smooth shave off the delta, which could mean that we, who's we? Me. I'm the one clicking buttons. I got the direction right for now, but I would like to see a little bit more commitment than 6 ticks, right? So let's see if we can get it going somewhere. There could be an initial reaction at 63.50, so that's definitely a danger zone. But really, if we are going to test the distribution curve from yesterday, then we should be okay. Let's just do that. Slowly, slowly, or softly, softly catching monkey. Is that what it... Do you remember that Only Fools and Horses? When they go softly, softly catching monkey. And I think Rodney goes, it's not softly, softly. That makes no sense. Slowly, slowly. HBX wants to know, hey Deeyana, what do you think about this gap in copper with a big push to the upside overnight? Until LME opens, I don't have an opinion on it, to be honest. Because usually, just like gold around this time of day, it tends to be more quiet than not. So I'm going to wait and see. Push in copper, I mean, look, I've been looking for it to start going through that big smash down that we had as a result of unexpected tariff news. And that just hasn't happened. They just haven't really recovered. So maybe the gap is an opportunity to keep going down. I looked at it earlier. It is still in a negative gamma, which means that any moves that we do see are likely to be a bit more amplified. Now, not amplified as if we're trading in the normal times. This is still August, so it's still going to be a bit draggy and a bit like, you know, less movement that we would like to see. But negative gamma does mean that it opens up the possibility that whatever side they decide to take, they may accelerate it and slightly exaggerate. One thing I don't like about copper today is that we do have stabilizer levels on the way down. So we have 49 and 48 representing GEX2 and GEX3 respectively. But I mean, it's in a similar situation as crude oil. We have a slight gap up and potentially reversing at the gamma wall. So that's the only thing I can tell you here. So far, GEX1 on copper has been a stabilizer, so they have not been able to move it any higher. If they go higher, I have some levels up at 452 and then further up at 455. Nothing here, with 455 being the average daily range high to the upside. But yeah, things tend to be super quiet for metals. I can see the gold is starting to move, but we'll see whether that's a fake out. Whether they're like, come trade me, I'm moving. I have juice. and then they just stop. Which is the case with most days. I don't know. There might be some reaction post NVIDIA, because there's a correlation there. And I don't know what the dollar is doing today. That could be an interesting development. But yeah, let's see if this crude oil can first and foremost smash through the initial balance low, because that's step one, right? We're still inside the initial balance and it's still not getting out of there. Did not get even to X1. We have the Asia low. It's 63.48. So ideally I want to see it go below that. If it doesn't, then it doesn't. And I'm going to close the trade and not freak out. Because when you start freaking out, that's when all hell breaks loose. Controlled losses is the name of the game here. Whether you win or lose, whatever happens, it's like an endurance. It's a mental endurance. How long can you last without freaking out? That's the real goal of trading, in case you didn't notice. DAX is a pain today. Yeah, I looked at it and I went, nah. Because it didn't even react much to NVIDIA. Like, that was a very, very muted reaction. Not that it should, because it's a German index, right? But yeah, I think everybody's just waiting for this summertime to be over. Maybe after Labor Day we can see some more commitment. But yeah, endurance, you know, just not running your accounts into the ground, being super tight with your risk, and I don't mean tight stop losses, because that doesn't work in low volatility either, because at any one point what can happen is that the low liquidity and the low number of contracts on the dome can actually just smash through the prices as if they're not there, because for the most part they won't be, right? So any bigger order, like this is a micro contract, but we can have a look at the big contract on crude oil as well, because that's how I do things. I don't really pay much attention to what the micros are doing. I always base my decisions on the main contract, and then I express my position in the micro. So even though they will be slightly different, because micro is a derivative of the main contract, so it's a derivative of a derivative of joy, but a lot of people still trade it. However, the main big boys that have enough depth in their pockets to move the markets, they will be not trading micros, but they will be trading the full contract. So that's what we want to be staring at. And you can see here that I see some bigger orders down at 63.49, which is at GEX level. Not surprising, but I really want to see something over 100 contracts. And as I'm scanning, I see nothing of the sort. And then it gets patchy. And to the upside, do we have something upside? That's a no. So yeah, even the dome is fairly neutral. Fairly neutral. So yeah, this is where tape reading of anything gets very difficult, because there's nothing going on. It's like, come on. Show me something. So yeah, I'm going to wait for, maybe give it another 10-15 minutes to see whether they want to move this crude oil anywhere. If not, I'm just going to close it, and I'm going to wait for a better time of the day to express my views. Yeah, so I think gold might be reacting to the NVIDIA side of things from last night. S&P initially pulled back. Didn't make it further than 64.60, which yesterday was an HVL level, but there was no gamma flip because we kept above it. So still a positive gamma. Crawled back up to the gamma wall, which is still at the same spot. It's still at 6,500. NVIDIA earnings came out great, so now we have a few days to see whether the equities can continue to go up. One thing about ES is that it has this GEX3 stabilizer in a positive gamma at 65.10. And GEX2 still at sort of 64.75. Last night there was also a GEX stabilizer, which is GEX3. So yeah, might stay a bit range bound there. If they reclaim it to the upside, I would be more inclined to run that. What I don't like about ES today is that all of the GEX levels are fairly close together, so you don't have that nice big old gap between one GEX to the next where they have some space to push it. Who's they? The wizards, market makers, right? We're talking about market making activities, and yeah, so that's why I'm not screaming to trade it. And same thing with DAX. DAX has so many bunched up levels, so that means every time we hit one of the GEX levels, it's going to be like a drunken person coming out of a club and hitting the wall. So it's not going to be a smooth, controlled, let's go this way. It's going to be like bump, oops, bump, oops, bump. So it's like very bumpy sort of ride. Even in positive gamma, closeness of the GEX levels annoys the hell out of me because it very rarely leads to smooth movement. What is the crime with the CPE? Yeah, I do agree, but do also understand that most traders who are trying to do prop hold their trades for like 30 seconds, maybe 3 minutes at most. Does it really matter what CPE is doing? This is why we don't talk much about macro, even though I think it would help the grasshoppers to settle down a bit. But yeah. Alright, so let's see. New 30-minute candle. Slightly below VWAP. Still that big rejection. Where do they want to take it? 36 contracts sitting at, what is this price even? 63, 69. That's not big enough. I don't know. I have no idea where it's going to go, honestly. Delta climbed up a bit again, so don't like that particularly. And anytime I'm looking at any sort of dome order blocks, I want to see 2 or 3 of them. Ideally 3 that have at the very least like 40, 50, 60 contracts. That tends to put a stop to any movement, any further movement. So let's see how they behave at VWAP. Maybe we can drop down to a 2-minute chart. And see where they want to take it. So far this is all just a range. Asia low still intact. Bouncing around, not doing that much. So yeah, let's give it another, what's the time? Another sort of 10 minutes or so. It doesn't make a move. We're still inside initial balance. Right, some sellers just tried to step in, but they were not particularly successful in doing anything, so probably not large enough. Just checking some higher time frames here. I mean, yeah, even on the daily chart, like if you look at the daily, chart, it looks like it's distributing, right? Now usually after a rise you have new supply created. This looks like a potential drop, base drop information. So it is in line with what we're seeing on higher time frames. The only way this fails is if we invalidate these sellers. So yeah, let's see. I have more than enough space on the stop loss because stop loss size that I'm using, it's like 2/3 of the London range. But yeah, I am also going to give it a time-based stop because I don't really like what this cumulative delta is doing. So yeah, let's see if anything else is catching my eyes, or an eye, just one. So copper had a bit of movement, that seems to have stopped now. Natural gas consolidating still. What's our Bob doing? Not much. Not much. Right. Yeah, it's trying to chop in range now. Great. Yeah, this is why crude oil not the best. Why did I do it? If Coach Hoop is here. Hoop! I've done it again. Right, let's just give it 6 more minutes, and then if nothing's happening in the favor of this trade, then we're going to close it wherever it is. Let me just check some news, because obviously crude oil is pretty sensitive to news, but it didn't exactly look newsy. It was just like, we're chopping in a range. Nothing really there. So news headline risk for now is not happening. Right, so on the 15-minute chart, we have this supply where we rejected the gamma wall. Let's see what happens. And remember, we're still inside the initial balance. We didn't even exit. So this is all just market maker territory, chopping around. See if they initiate some shorts around here, or if they want to go higher. They could go back to 64 as well, you know. Don't want to see that, and I will be out of that if it gives me a chance. Four more minutes. Paul H says, I got Edge 1 yesterday, use your link and code. Oh, thank you. Very nice. I'm very impressed with it. I love that I'll be able to keep all my stats from Topstep in one journal. Yeah. It's a very good one. A to DY to DZ. Hi Deeyana, any class on psychology? So, as you know, we had some troubles. And so far, we are looking for either a psychologist or neuropsychiatrist that would join me here. Right now, this is an odd time of the day for most people who are stateside, so we don't have anybody yet, but we are looking. we are looking. I'm hoping to bring back Neuro Wednesdays at one point. So we'll see. All right, let me see what I've missed because I have not been reading all the questions. Are you bearish oil? What's short from I mean, I am bearish oil, but as you can see, it's just chopping. It's chopping around. It's not doing much. I tried a momentum break trade. I did try a momentum break. It didn't. It's not looking good, as you can see. It's like crude oil. I'm always short on it. I'm always bearish on crude oil. And it, you know, it still looks fine with that 64. Until we reclaim gamma wall, to me, this is all game. This whole story of having a nice reversal on the daily chart and sitting not too far away from the value area for a mean reversion gap fill with the already rejection at 64. You know, to me, this is looking bearish until we reclaim 64 with quite some confidence, not just kind of like to whip through it. So I would be bearish. But having said that, me and crude oil have a bit of a tense relationship, let's put it that way. It now only moves barely $1 a day, where it used to move like 300-400 ticks. So it would allow you to readjust your positions and then reward you with about 70 to 100 ticks in the opposite direction, and that's where you have to be really quick. Nowadays it seems to chop around a lot, and then it does its like sort of 97 ticks and 105 ticks, and then it just stops or goes back the other way. So I absolutely despise that. I don't know why I'm even at crude oil, and every so often it draws me in to trade it. It goes, look at me, I look like the old crude oil because look, I made a initial balance size of 47 ticks. That's awesome, right? So trade me, D. Trade me, I look great. And then I go, you're right, you do look good. And then I try and trade it, and then it smacks me on the face. So sometimes it works out, but I try to trade crude oil no more often than like once every 2 weeks. And then if I do trade it, it will usually be an option of some kind. If we are at, tops of ranges and stuff, I might, do a short option or something. But if we're like at the extremes of ranges, then, I try to do something options-wise. But yeah, it's a fickle beast these days. It's just so tight. So tight on everything, really. But yeah, I tried a momentum break trade to the downside as a gap fill, and it just didn't, you can see it didn't really go there. So now I'm giving it a time to see if it can actually come back outside of the supply. If it doesn't, then I'm going to close it. But whatever, I mean, even if I lose this, it's only like, peanuts. It's $45, so I don't care. Yeah, so first time in the stream, already learning from you. Yeah, well, that's good. HBX, what do you think of this gap in cover? Yeah, I answered that already. What software/tool did you show? The bubble chart. This is Bookmap. Bookmap with the big balls. Bubbles. Get your mind a little bit better. Yeah, so Bookmap is a tape reading tool. It visualizes the time and sales. It visualizes the dome, and I prefer it to only staring at time and sales because you can also see cumulative delta, which is this oscillator at the bottom, so you can clearly see what's going on that minute time frame. A lot of people like to go down to like a 30-second chart, 1 minute chart, but I feel that we lose things as we do that. There's very few people that can look at those time frames and actually sift out what's real, what's noise. Bookmap is a different tool that smushes all the volume, time and sales, dome, delta, all of it in one, to me, easier digestible visual tool. But it can be too much for some people. I've actually had some traders who said, you know, actually, Bookmap is just a mess to me, and I can't figure out what I'm looking at. Too much. One thing that does help, like if you go up to this area, you can actually adjust how often the bubbles are going to appear. But you know, I sort of like it for crude oil specifically. I sort of like it medium. If you were on NQ during regular trading hours, it's cancerous because it just looks like it's having a seizure, like constant seizure. And for that, I do two things. If I am ever going to trade NQ, which I usually do for power hours, sometimes I do these like towards the MOC trades on NQ, very rarely, but I will every so often notice something that is tradable for me. And then I will aim to enter just after MOC comes out. And I will typically, I can't do that on Topstep because they don't allow us to trade after hours. And I don't do this when earnings are happening. So I will hold the trade through the final hour because elsewhere on your personal brokerage, you can actually keep positions open all the way up to 5 p.m. Eastern. That's 10 p.m. my time and 4 p.m. Central. So yeah. All right, so what's happening now is that we have a selling wick in development, right? It is clumsily trying to react to this previously created supply that is visible both on a 15 and 30-minute chart. But 15-minute chart is, I think, what they were aiming for here. Because for now they seem to have slowed down a little bit. And I literally have no other reference in between the gamma wall at 64 and 63.50 apart from this supply. So three-minute chart, just jumping through the time frames to see what they're doing. I mean, this still looks bearish to me, doesn't it? Am I getting really biased here? Because I'm short biased crude oil, so I'm like, oh, where's he short? I mean, you tell me, right? Lower high. Lower high. Okay, so here we have higher low. Is that a maybe it's a contraction of some sort. What does Dolby call it? The Dorito? Is it a Dorito? Interesting. I'm going to give it a little bit more time because something's up here. Like we are building volume. So this is now a POC from the developing visible range volume profile. They've kind of slowed down. So let's see what they want to do. This is too large a time frame. Too large a time frame for this purpose because we're looking at granular movement. One thing I would like to see is that from this just microstructure point of view that we go below 63.77 because that's kind of the point of a market shift where previously we pushed higher. And if it can't do that, then I'm going to have to let this go, but it's fine. Okay, Bookmap's still looking a bit flat here. Delta's just chilling. It's flattened out too. But yeah, just not really enough size anywhere to properly read what's going on. It's all very sluggish and slow. Shay Hughes, D, how much of the available risk capital would you use for a typical trade, and are you in favor of adjusting risk to the grade of the trade? Honestly, I'm not in favor of that last part unless you've had years and years and years of data and you know your playbooks and your setups to the core. So you've tested it over like 3 years, Minimum, you know which setups work for you, you know which setups don't work for you. Then you can start messing around with size. Until that comes, you are in danger of messing around with the risk per trade using flawed data or data that hasn't been tried and tested through multiple market sentiments. High volatility, low volatility, normal volatility, summertime, Christmas time, January, May, when we're normally trading, you know. So I'm not in favor of changing size in relation to the setup because you don't have enough data to support it, right? But how much of the available risk capital? I'm in the camp that really there's a difference trading your own personal capital and prop accounts. It's two different things, okay? And we see it online all the time where people who are generally very good trading their personal capital, they can't really figure out the prop. And usually it's down to a couple of things. Not having a good risk model that speaks to the rules of prop. So that's one big problem. And second of all, over leveraging. And then they lose the plot, then they start over trading. And immediately your risk of ruin is like in the billions of percentile. Not like, you know, oh, you have 100% of blowing up. No, you have like a bazillion, million, trillion percent of blowing up. So I'm not surprised there's a high failure rate because people trade through the lens of their emotions and their life experiences, and they effectively try to express those unknowingly. I think we do it subconsciously, but you try to express your money beliefs and expectations and frustrations and fears and a whole bunch of other things that comes with our lovely psychology and the flawed brain patterns that we have. So one thing that I wanted to say is that when you have random thoughts popping into your head, somebody asked me about running a psychology thing, right? So I would say that something that I heard as a very, very good explanation of how to think about yourself is that your thoughts are just loops from your nervous system, that your nervous system kind of finds familiar, and therefore it kind of makes you think you're making decisions, but you're not. You're actually just repeating patterns that have worked for you previously in dangerous situations. That's all you're doing, right? And unfortunately, for trading, because it pokes into everything that we've been told not to do, to not go into unsafe environments, to not go into environments of uncertainty, to stay safe, to stay comfortable, to run away from danger, all of that it's working against you. So you really need to do a lot of work on yourself to be okay with, for example, sitting in 17 ticks drawdown and not going, oh my God, I'm a drawdown. Oh, I'm wrong. Am I wrong? I'm wrong. Oh no, I'm wrong. And then you start doing stupid things. So that's how you get on tilt. There's no other way. So if you don't interrupt that loop consciously and just going, I'm going to be uncomfortable. This will be uncomfortable. But you know what? Take that brain. I'm going to get comfortable being uncomfortable. That's how you grow as a trader. You're not going to grow by succumbing to your own randomness of thought patterns that are literally nothing but, like I said, a loop of previous patterns that have worked for you. So it's, it's a tough job. This is the work that is probably not something that most people want to do. And when somebody, like just at our anniversary party, just literally on Saturday gone by, we had a friend who, her name is Karen. We've known her for a very, very long time. Paul, you met Karen, lovely woman. So she said to me, oh yeah, so you've got to teach me how to do this trading thing. And she is, a woman of a certain age, and not that matters, but she doesn't really have any, she's not an engineer. Right now she's doing gardening. She used to work as a nurse, you know, she's not really a doctor. You know, I respect nurses, but it's a different level of skill when you are a surgeon, when you are, you know, you still have decent memory, but you don't necessarily have to go into that much technical side of things, and then being able to pull that in all sorts of pressure situations. So she is a nurse, so she does have some robustness to her, but just the fact that she went into, you know, a very comfortable area, a stage of her life, and she's like, oh, you know, I need to get into this trading thing. And I'm like, yeah, no. Like, you got to show me. And I'm like, I'm not going to be showing you, because it's not what you think. Like, you have to give yourself fully. Like, you literally have to make your whole existence into getting better at recognizing yourself, recognizing technical things. It's literally like doing another university degree. So it's going to take you anywhere from like 3 to 5 years, maybe even longer, to reach profitability. Are you prepared to give that kind of time? And she goes, oh, that sounds very difficult. And I'm like, yeah. Because people think just because you click buttons, it's easy. It's not. Because you're battling all of your previous established patterns. And trading literally goes against the grain of everything you know, right? It goes against the grain of more hours worked means more money. It doesn't, right? More trades done, more money. It doesn't. In fact, the most active traders are the ones who typically lose money. So you trade, you know, 100 trades per day as a noob, you're going to end up losing a lot of cash. That's how people lose cash, right? So typically we've seen over and over that the more selective traders and the ones who are careful about risk, they are the ones who do the best over time. Over time being a very important word, because over time is how you find your edge. Time is the true judge of anybody's performance. So, like, for example, somebody yesterday said, oh, you know, I have a 75% accuracy. And I'm like, well, what sort of sample size are you basing that on? And they said, oh, 3 months of XFAs. 3 months. Like, you haven't even been through like 2 different market states. What are you measuring? And then, by their own admission, said that they, like, you're probably in chat today. So then they said, but you know, I do blow up XFAs. Okay, so what sort of accuracy do you have when you're blowing up XFAs? That's the bit that matters. I don't care what your accuracy is when you're doing well, okay? I care that you include the accuracy from the XFAs where you've done stupid things and you've ended up losing. That's how I came up with my accuracy of 43% long term. I did, like, look, I have days and weeks and even a whole month where I'm smashing 80% accuracy. Is that a realistic thing? No, because it's only 1 month. But you take in the larger sample size and you see whether you have a true edge. Right, so we've broken down that low that I was looking for to hold. So for now, this is actually showing me that I need to wait, sadly. So I'm extending the time for this potential trade to move. But the trouble is it is a range at the moment. So it's be boring, yeah? But we wait, it's okay. Yeah, so the accuracy should be a reflection of all of your good days, Muppet moments, absolute blow-ups, total F-ups. Then tell me what sort of accuracy you have. That's your true edge. And if that falls sub 40%, you really need 2 R multiples per trade to make that work long term. It's just the reality. It's just the numbers. But when it comes to your personal capital, I really would not go. And again, it would depend on the amount of personal capital you have, right? You really shouldn't, if you trade, you know, a couple of trades per day, I wouldn't really use more than 1%, maybe even less than that, just to keep everything safe. If you're in prop accounts and you trade like 2-3 trades per day, maybe 4 to 5. Again, no more than about, I would say, to start with, before you build a buffer, to start with, no more than 2 or 3% per position. If you're not doing a million trades, the more you do, the more trades you do, the less size you need to use per trade, because the number of trades per day also increases your risk of ruin. So you do more trades per day, you have more chances of blowing up when your accuracy slips on that day. If you're very selective and you stick to consistent, similar number of trades per day, let's say you do 3 trades per day. Whatever happens, you do 3 trades per day, win or lose, and you walk away. That's a different equation. Because now, you know, you can first and foremost set it in your risk parameters. So you can say no more than 3 trades per day. The system will lock you out. Best thing since sliced bread. But more to the point, you will have an ability to maybe use, 2% per position size, and then stick to maybe even 3 if you're doing 3%. So that would be, if you lose one day, it would be 9% of loss. If you lose all 3, so not too terrible, still keeping within that sort of max 10% loss of the day for the prop accounts. Do not do that for your personal brokerage accounts. That is a ludicrous amount of risk. Unless you have lots of savings and you are a fairly well capitalized individual and you're only using a small portion of your net worth for your active trading activities. But when you're starting out, you don't have much sample size, or you have sample size that sucks because it's only like a couple of months or a couple of days in the worst cases. The funniest thing is when somebody tells me, I have 90% accuracy. And I was like, what are you basing that on? On the 2 days that I passed my call line. But I cannot seem to hold on to my XFAs. And I was like, I wonder why. So strange, right? So strange. It's like you're using 2 days for a sample size to assess your skill level. That's being like high on hopium in an entirely different way. So you don't have 90% accuracy. You had 90% accuracy for the 2 days that you got lucky on, or that the market condition just happened to play by the way you were, expecting. For all the other days, you're doing stupid things because the market is not playing ball, but you're only taking the accuracy from those 2 days. Well, what about the accuracy when you absolutely sucked? And I saw this in VIP Season 2, actually. Like, just how deluded people were about their performance. Like, I had this one person who was like, I'm a scalper. And I'm like, okay. We're talking like negative risk reward by like 0.5, so minus 0.5. And then on a per trade basis. Loads of trades done per day, like 40, 50, 60 trades done. And then the accuracy was 13%. But they claimed that they were actually really good. And they were like, no, I have really high accuracy. And I was like, well, I've watched you trade for like 2-3 months now. That's just not the case. Like, it's just not the case. So whatever you're doing, that's the time to throw it in the trash, put it on fire, and start again. Because this will never work in any combination of numbers. Negative risk reward, 13% accuracy. 13! Just to emphasize, 13% accuracy. So I'm like, interesting mindset, right? That they're focusing on the good times and choosing not to acknowledge the sucky trading that they've been doing. It's like, what is going on there, It's totally a psychological mindset problem. It has nothing to do with somebody being deluded. It's literally how our brains are wired to operate, Trauma is like, oh, we blocked that out. That was terrible. So we forget about it. Because you know that the trauma response, which actually a lot of traders suffer from, don't know whether you know this. Trauma response is to block things out. So we block things out that causes huge emotional harm, but we keep the nice memories that we feel really good about. So it's like, great. So can I just forget, losing $250,000 for an FOMC day? Because for me, I don't forget anything. I'm like an elephant, unfortunately. So for intraday trading, I do forget stuff. Like you asked me what sort of trades I did yesterday, I'll be like, I don't know. I need to have a look at what the chart looked like, and then it all comes flooding back to me. But just like off the top of my head, I have no idea what I was doing. So as soon as I see the chart, I'll be like, yeah, that was failed auction, there was this attempt, there was that attempt. But when it comes to trauma response, to me, I'm the opposite. I remember all of the bad stuff that happens. And I use it as a learning experience. I don't know why I'm wild that way, but I just am. And I think overall in my life, it has helped me out, especially in trading. Because I remember going, oh, I did that last time, that didn't work. So I need to be a bit more careful. That's what I'm thinking about. I'm not thinking about, hey, well, yeah, there was one time when it didn't work, but there was that other time when I made like, 86 grand and it was amazing. It's like, yeah, great. It was like one day. Paul H says, it is the most difficult endeavor I have ever taken on, and I have done some very difficult jobs in the past. Yeah, same here. So yeah, Shay, when it comes to prop, divide the maximum loss limit by 10. That becomes your daily loss limit. Daily loss limit, not per trade. Daily loss limit. So whatever number of trades, because I'm trying to be more flexible with the different people's styles. So whatever number of trades per day you're doing, try to fit it into that daily loss limit. So very practically, $200 daily loss limit on a 50K, fit in the number of trades you do. Paul H says, I had 3 losing trades in GC, small losses, but I've now used the trade lockout. I have an open range trade, but win or lose, I want to be done until LME. Great feature. Yeah. I love the lockout features. I love all of the risk features that Topstep says. Like I said, you love it or hate it, they have been very disruptive in bringing the risk tools to the prop space, which nobody's done before. And look, there are risk tools that you can buy. I have one on Ninja, but I had to pay, not a trivial amount of money for it. So, when you take in the Ninja license, then, the extra tools and stuff, it's, it can mount up very quickly. This is not a cheap job. Like whenever somebody tells me, I need money quickly, and I'm like, yeah, don't go trading. Start an OnlyFans or something. It's going to be quick. Greg says, evidence trading, limited risk. That means wait for a test at resistance or support. I disagree with that because there are certain trades that can be taken away from support and resistance. Like you have GEX levels, for example, and we will see if this ever takes off. You can even watch it if I'm not on. Watch what happens with GEX 1 today, which is at 63.50. Because there are momentum trades. So here it is. Support and resistance traders, they're really using only one setup, a reversal. True? True. They're not doing breakouts. They're not doing momentum trades. They're not doing range trades. They're just using reversal trades. That's the setup. Some sort of a reversion, right? But here's the thing. As an intraday trader, over the years, I found that you really have to hone each type of a trade out of those categories separately. So you have to, like whatever your strength is, you have to identify your weaknesses and then work on getting better. For example, you see my weakness of range trading today, okay? I hate ranges. I'm either a reversion trader or a momentum trader. And I would say reversion trader is one of my main strengths. But when the market then chops in a range, what do? I take the majority of the range. And then I have two options. I can commit to the initial trade idea with the view that I just haven't timed it correctly, but that it is going to happen at some point of the day, and commit to the trade, do or die, not touch it, not overmanage it, not kill it, not try and exit, then enter, then exit and enter, and therefore create like 4, 5, 6 different losses instead of just one, or one partial loss. But I also recognize that over the years I have gotten better at recognizing when it's a range, and if it's truly a range, I will adjust. So I would, close this trade and then try something else. Maybe just go to the top of the ranges and then play those reversals. But you have to get good at all of them. Mean reversion, momentum, breakouts, continuations, range trading. Okay, you can argue that momentum and continuation are the same thing. Either one of them can actually fall into a mean reversion setup as well, because maybe you're looking at a reversion to value, like I'm looking at here, but you are actually using a break of the lower time frame structure to do so. So that, they can be a combo of the two. But if you're only good at reversals, and you only ever want to do reversals, that's not, in my opinion, going to serve you that well, because you can't always have reversals that go for million ticks, right? If it gets stuck in a range, you have to be objective enough to recognize it, and just go, I'm wrong. Okay, so how do I make this better now? Can I even make it better? How do I approach this? So let's say I'm totally wrong on this, right? And I feel that people learn a lot more on trades that I break down when I'm wrong than the ones that just work out straight away, which is a bit strange to me, but there you go. So let's actually make this a bit bigger. So how can we now maybe adjust? Let's say that nothing happens at GEX1, it actually ends up being supportive. So now we're stuck in a range. And it just stays there, bouncing between 63.50 and 64. Well, obviously my entry sort of towards the bottom of that range is probably going to be not so good, right? Unless something changes, unless something shifts. And obviously we have NYMEX, we have a whole bunch of stuff happening. And today is the day when typically, on Thursdays, crude oil likes to trend because there's this thing called the bi-weekly option expiries. So if a trend appears of any sort, I don't fight it on Thursday. So that's why I'm not too keen to do range trades. But let's just hypothesize, right? So you have a range, right? Bottom of the range, top of the range. So now a better way to do things is not to be shorting into 55 and hoping that GEX1 is going to act as an accelerator, but instead to start bouncing from the low, so longing from ballpark 63.50, maybe after a bit of a liquidity grab, and then to the middle of the range. That could be VWAP, that could be POC, that could be anything that you can confidently read as the middle of the range. You can even use fibs, so you can go fib from top to bottom, that becomes your midpoint. And then shorts from 64 ballpark, again expecting liquidity grabs above that and reversals. And then again, your target is not going to be all the way down to the range, because that is actually not the highest statistical target on range bound days. Instead, it is the middle yet again. Yes, it might rotate, but you don't know to which side. However, the middle of the range is statistically most guaranteed on range bound days. So the better your positioning is in relation to this newly developed range, the better off your profit margin, right? And then you can just bounce it. This is the days that if they set up that way, that's what Hogue means. I used to call those the ATM, the cash machine, right? Because you go long at the bottom, you go short at the top, take profits in the middle. If there's an obvious skew in the market, like an obvious trend, then you might be able to take the longs and run them as a full rotation through the range, improving the profit margin on that setup. But generally, statistically, middles of the ranges are your targets or range bound days. Okay, can't look for too much more. So yeah, take it as you will. It's just something that I found about myself, that I am not the best at ranges, but over the years I've learned how to recognize them, and then when the time of the day is right and I felt that we had enough time to figure out whether it's a middle of the range or not, that's when I switch strategies. And I typically take about 2 hours of data to figure out what we have going on. I mean, today we are just still chopping inside the initial balance, so we didn't even extend the initial balance. This is super quiet for crude oil. Distributes to the upside, tries to go down, tries to go up, then distributes again. Let's see if I can maybe jump to a slightly higher time frame to figure out if there's anything to see here. Not really. 1 hour time frame, lower high, so contraction of the range. Yeah, again, I think that until 64 is reclaimed, there's really nothing for me to do here. So this is just relax, give it time. If you get smacked in the face, you get smacked in the face. It's just one trade. So it's okay to be wrong. That's my whole thing. And like I said, long term, I have only 43% accuracy, only. But my risk reward is floating anywhere from 1.8 all the way up to 3.2 on average. Okay, now that we've spent so much time here, I am going to increase this to, where is that next area? So we have HVL, and where is my, let me just check where the ADR low is located. So it's, yeah, that's what I thought, 62.88. So maybe if we go down to, if this actually takes off to the downside, if we get to 63, smash through this low, that would be my take profit. Why did I increase this? Because on the 1 hour chart, we are still rejecting. And I mean, this candle is not finished yet, but if you look at these two, they are actually called, there's a pattern called the railway track, and it can be a decent reversal pattern. It has to have sort of wicks, at least on one side, equal body candles, and this one even has, like, it literally looks like two trains next to each other in a station. That can be a reversal pattern. So we'll see. But so far, I just think this is distributing and maybe preparing for a drop. Again, my short bias on crude oil. Can you tell? I'm not usually that biased, but there's nothing else for me to fall back on. So I'm falling back on the fact that the daily chart looks like this. And now we're getting a similar situation developing on a 1 hour time frame. So yeah. And then if I'm wrong, so be it. But it's survived for what, 45 minutes? At least half an hour, right? And it's still showing signs of rejection here. It's just slow. It's like painfully slow. Like, come on. Yeah, Hoop is going to tell me off today. He's going to be like, you traded crude oil. No, D. Don't do it. Why did you do it? It's like, it's all right. It's only 1 micro. We'll be all right. If we're wrong, we're wrong. All right. Let's see. So again, Greg, study the force of buying and selling wave and stay on the stronger side. Great. So what happens on range bound days? Like, again, am I just talking, you know, Talking Martian. What happens on a range bound day when you have neither side doing anything? Are you going to stay out? They can be beautiful. Look, I've had some days where I've identified the range based on a neutral day type and an inside day open. And arguably, I trade more on those days with a lower risk reward. Which brings me to John Kilio's question. Do I use a fixed risk reward ratio or does it depend on the setup? So, in general, I want to see it 2R as a default. But my risk reward is not static. So I'm not going to be always looking for 2Rs. And I'm not always going to be looking for, massive swings. But if I identify that there is a potential for a swing reversal on the daily chart and things are lining up, I definitely try to get more out of it. So therefore I let it go and I open up my take profit whilst also keeping an eye on which of the options stronger levels are actually bringing us more magnetic pull, because the options levels act as a magnet, right? Now today, again on crude oil, we are in a negative gamma environment. So whatever move that they make, once they make it, it's likely to be more exaggerated than it should be. And there's a mix of things happening. We are post inventories day. There's a bi-weekly crude oil option expiry that happens. There's like a ton of things that could affect the fact that I'm looking for shorts. And then from a technical point of view, pure technical point of view, we have this sort of a situation going on the daily chart where we tried to reverse, we tried to crawl into the previous range, and if you look at where the previous supply was, you can say that we've now tried to go there, rejected it, and we are distributing. After distribution, if you like the Wyckoff theory, and I do love Wyckoff for basic market structures, after a markup comes distribution. After distribution comes liquidation. Could I be wrong? Yes. Absolutely. Nobody knows anything, really. But to me, I would not be going along into this, even if that's the right call, right? If this is like some kind of a trend change or whatever, I just wouldn't be long here. I would like to be long down here. Or I would like to be long up here once we eradicate this little pullback. So hopefully that makes it a little clearer. But no, I don't generally have a fixed risk reward. It will vary depending on the day type, depending on the opportunity. But when I'm teaching people purely for purposes of consistency, I say look for opportunities that may bring you to our multiples. And I say use that as a default target when you are still learning, and don't mess around until you're able to develop your situational awareness to the point where you can start changing things around. Because you will always be better at one, like I mentioned before, you will always be better at one part of the equation, either reversion trades or maybe breakout trades. But in general, people are not that great at range trading when they first start, because everybody just chases big moves, right? So they want to be a breakout trader or a reversion trader. And then range bound is like, oh, that's boring because you have to do more work on those days. But they can be just as sweet. So yeah, on range bound days, I will be happy with 1-to-1s. I will be even happy with a partial 0.8. You know, maybe I caught a reversal, but it didn't quite reach the middle of that range. I will take that on a range day. Absolutely. And then maybe one of those range trades gets to 1.5R. I will take that too, because it's a range bound day. We have not much space to work with. And you just have to change your mind to effectively be adapting your risk reward expectation to the day type that we have. And this is where I love profile, because it can unambiguously tell you whether you're opening outside of balance, inside of balance, whether you have some kind of a neutral day type with the initial balance extensions on both sides? Is it extending on one side but failing the auction and then stopping halfway through the initial balance, never finishing anything and then fizzling out? That can be a sign of a low volatility day. So maybe then you can use a new distribution curve as a result of that new squiggle that happened later on in the session, rather than looking for a full neutral day type. Like, so many ways to approach it. But it's all about looking at the distribution curves. Right now, crude oil is very evenly distributed in what I call the D-type day, the me-type day. Why? Because it's all, like, if I show you, let's just clean stuff up first before I show you. And I'm sorry for the white candles. And I'm also going to get rid of the standard deviation, because it kind of clutters things up a little bit. So here's the profile for today. These are 30-minute TPOs. What does this remind you of? D, letter D. Very, very evenly distributed, right? Dolby calls it Dorito. But on the profile, you can clearly see it, right? It's like, that's the initial balance. We're still inside the initial balance, and we're just building structure. VWAP, straight in the middle. But can you tell immediately at the open it's going to be a D-shaped day? No. So that shows up after, like if we were inside balance for London, I would have been more inclined to think, yeah, inside day. We are inside balance for the NYMEX session, so maybe I should have used the NYMEX value. But again, London does have some movement for oil on some days. It's just not consistent enough. So yeah, D-shaped day. And if you're going to play ranges, you really only have, from the top, you have about 25 ticks to the middle. So yeah, you're basically working within a barely 50 tick range. So you have to fit in your expectations and your targets within that 50 tick range. It's very tight, very tight. Like, personally, if I see a 50 tick range, I will still look for some sort of a momentum breakout. I don't like I want it to have at least 100 or 120 ticks in order for me to play the range. Because it's just not worth it. You know, you get like, oh, 20 ticks, great. It's all that work. And then you end up losing one, then you win one, and then you win another one, and then you're like, I'm only up 300. Jesus, I'm knackered. So I'm a lazy trader. I want setups that I'm selective over to have enough tickage in them, enough profit margin in order to bring me at least 70 ticks profit for very little work. So I don't like over-managing my trades at the best of times. And yeah, I learned to be okay with letting things go. Committing to the trade idea. This is a mean reversion gap fill. And then if we manage to go into the value acceptance and rotate all the way down, all the better. And then Thursday, if it shows up as a trending day, especially considering we're coming up to the end of the month. And that's it. Tendra, how long in a trade and what condition would you consider to adjust? Just stop. Never adjusting stops. I don't like moving stops because your stop loss is there for a reason. Okay? Anytime I'm moving stops, it always comes back and bites me. So I stopped moving stops probably about 9 years ago, 10 years ago. A while back, yeah. And why? Because everybody was like, oh yeah, you know, protecting your stops. And then I went into a big prop firm. And they were not really in favor of moving stops. They were in favor of committing to the trade. And here's what the thinking was behind that. Traders moving stops, especially traders who are retail, they have this wrong approach to moving stops. So they will move the stops as soon as they're in profit. too soon, right? Most people will do that. That's not a strategy, that's fear. The only people where I know trading stops works for them are those that went and used data to support that. Now for me, because of the types of setups that I use, they're typically at some sort of swing extremes for bigger trades. They will get tested at least once, maybe twice, before the real move shows up. So when it's testing the entry, after it moves like, let's say 30 ticks away, then it tests the entry. If you move your stop at that point, you're out of a trade. We are supposed to be risk takers, and yet, by the way a lot of people trade, I've had the pleasure to watch many people in the VIP season 2. I'm now in season 3 as a coach, so I'm looking forward to seeing how people are trading in this season, because I do think that this crowd of people that we've got now are very different from the previous ones. In the previous ones, I was like, are you here for the resets? Because frankly, I don't know who this person is and never seen them in Discord. One of them even had a name not on Discord. So it's a Discord class, Discord VIP group, and you're not on. Great. Yeah, that's just brilliant. But yeah, I feel that by watching people do everything in their power to avoid risk is not exactly what you should be doing. So I was actually talking to my then risk manager, and I said, should I be moving stops? Should I, what do you think? And he was a trader for a long, long time, like 30 years. And he said, well, I prefer to partial. And I was like, okay. Now, he was trading more kind of stocks, and he would be, holding trades for quite a while, especially if the stocks in play kind of just kept going. And I was like, okay, well, how does that work? Talk me through it so I don't have to do all the work myself. This is why you get coaches. This is why you get mentors, people who have figured things out before you and are using something so that you don't have to do extra work. They're basically giving you a little bit of a shortcut. It's not like, you're not suddenly going to become this monstrously good trader, because that takes time. But they just give you that little shortcut so you don't waste time. So he said to me, well, I like to cut in thirds. So if we get to 2R, I will cut a third of the position off. If it then continues, I then effectively have a little bit of protection, and then I let the rest of it go. So I was like, but why a third? And he said, well, because it covers a little bit of the initial risk, but it still keeps me in the game with 2/3 of the position. So I actually took that further, where at 2R multiples, if I'm running a swing, I would actually take half off, which brings me a 0% net risk. It's exactly the same as you moving your stops to a zero risk point, but to me, this is a better way. Why? Because I book some profits. Now I have a zero net trade that does not mess with the stop loss placement. Stop is still where it is. It's just if something happens and it all just turns around against you and smacks you in the face, you'll be left with zero risk. But you're also giving the trade more time to do what it needs to do. So that's kind of, if I'm running over 2R multiples, I will be running it on a half position if I'm able to. If I'm in all, just like one lot, I will literally just take all of it off at 2R if we're there. I'm not going to chase anything more, because you don't have the flexibility to take half off, right? So yeah. Why is open P&L blue? Mine shows red when negative. Because I hate red color. In case you notice, I avoid having red. I have bad association with red because of my background. I've seen, it's because I grew up in former Yugoslavia in the 90s. Yay me. So I have bad association with red because it reminds me of wars, it reminds me of blood, it reminds me of horrible things that we've seen back then, and I don't like red, okay? So even though I had red hair for a very long time, maybe psychologists and psychiatrists can, figure that one out. But on the screen when I'm trading, I have hugely negative associations with color red. So I change it. Okay. The good news says, D, let's talk about money and the future, shall we? Question, if you had 1 million, what would you invest it in? I do have 1 million, and right now a lot of it is invested in Palantir. I invested it in this house as well, so this is a new house. So property and strong stocks that are still cheap. One of the ones that, like, not financial advice. I'm not a CTA. I'm Series 3 qualified, but I'm not a CTA. So, again, educational only. Tradertainment, right? But here's what I'm looking at. I am fishing for some other stocks. QuantumScape is interesting. So that's one of the companies I'm kind of scoping. IonQ as well, and then some of the others that are a little bit more out there, like let me see what the names are, because I forget, especially at this time of the year, of the day, of the year. At this time of the year, I just forget everything. Yes, senior moment there, guys. Senior moment. Okay, so. Where are my... Oh, it's raining. That's nice. Hold on. Let's see. I've lost it. Guys. I have somewhere, I don't know where, but I do have the... list of stocks. There's one that it's something lunar something. They're basically machines for space exploration, because I'm a geek and I love anything space related. So yeah, it's certainly interesting. But yeah, those are 2 or 3 companies that I'm looking at. Anyways, that is it. I'm gonna sit on this or commit depending on what happens into this 11 o'clock when everything starts to liven up a little bit. But yeah, if we lose this, we lose $45 plus some commissions. If it wins, it wins. Yay, we carry on. Just one trade, nothing to freak out about. But yeah, we'll see what Thursday brings. I will see you tomorrow for my lunchbox trading. Now, Joseph Anthony is in the chat, so he's going to be on with me tomorrow at 6 p.m. London time, so do join us for another banter. And he does use some ICT concepts, however, he uses it in a slightly different way, and he's a very, very interesting guy all around, so don't miss that. Apart from that, have a great weekend if I don't see you. This was the Eurotrade. I'm your host, Marcus Stalker D, and I will see you very soon. Take care.